Can you buy a house with zero money down? Yes, sometimes you can. But what most people mean is, can I buy a house with zero money out of pocket? That's completely different. And this is where the internet starts acting like every house comes with a coupon code and free shipping. Today, I'm going to break down the real zero down options, who they're best for, what the catches are, and the step-by-step way to know if it's actually possible for you without getting halfway to closing and finding out you still need $600 you don't have. Welcome to the channel, everyone. I'm Chad Hoerner with Haven Real Estate, and I help bring clarity and peace to your real estate journey. If that sounds like what you need, go ahead and subscribe. If you tell me you're buying with zero down, I'm gonna ask you one question. How much cash to close do you have? Because zero down with no plan is how people end up financing a house and crying in the parking lot. Here are three actual options: VA, USDA, and DPA, down payment assistance. Plus, there's a move that can cut your cash to close. And if you're thinking, I'll just figure this out later, that's how deals die. Later is where surprises live. VA is the best option if you qualify. We can get to that in a minute. USDA is the best if your location is flexible. DPA is the best if your savings is the problem. And here's a quick note. I'm not a lender, so I'm not quoting rates or giving loan approvals on YouTube. I'm giving you the real world playbook. And then a good lender confirms those numbers. And yes, most good agents have a good lender they trust, including myself, because the fastest way to lose a deal is having shaky financing and guessing your way through it like it's an escape room. Here's the truth. Zero down does not equal zero cash. Let's start with the biggest misconception. Down payment is only one part of your total cost. Even if your down payment is zero, you can still have cash to close. Here's what can still cost money. The inspection, and you should do this, don't be a superhero. The appraisal, usually required by the lender, and the closing costs. That can be title, lender fees, escrow, recording, etc. And prepaid costs like insurance plus taxes plus interest. So when you hear zero down, don't ask, is it real? Ask, what's my estimated cash to close? Because zero down is a loan structure. Zero cash is a unicorn. And if you see one, it's probably wearing a lender logo. Let's talk about the real ways people do zero down. Option one, a VA loan. Best zero down tool if you qualify. This type of loan is only good for U.S. military service members, veterans, and some surviving spouses. Eligibility is set by the VA, and you typically prove it with a certificate of eligibility. If you are eligible for a VA loan, this is typically the cleanest path. You might want a VA loan if you qualify, you want zero down, you want competitive terms without needing perfect Instagram credit, or you want a loan built for stability and not gimmicks. And here's a reality check. What people don't say in the TikToks. You'll still have closing costs. You will still need an inspection, an appraisal, and the home must meet basic property standards. If you think you qualify, ask your lender this. Can we run a VA pre-approval and estimate cash to close in my price range? Or check out their website. Okay, option two, USDA loan. Zero down, but location matters. USDA is another legit zero down option, but it's designed for eligible areas. You might want USDA if you're okay living outside the core bubble, you want zero down, you're looking for more space and value, you can meet eligibility requirements, a lender can confirm this fast. Here's a quick reality check. Not every area qualifies. Rules can change by the map and the zone, and the house condition still matters. But here's what you can do. Pick 2 to 3 zip codes you like and ask, do these addresses qualify for USDA, and what would cash to close look like? Option 3, down payment assistance, or DPA. Not zero down, but it can feel like it. This is where people get closer to I didn't bring much money territory. You might want DPA if you're a first-time home buyer, you have decent income but not a huge savings pile, you can handle extra paperwork and timelines, or you want help bridging the gap. Here's a few things to keep in mind. Some DPA is a second loan. It's not free money. There can be income limits, home buyer education, and price caps. It also might make your offer less clean if there's a multiple offer situation, depending on the market. Down payment assistance is awesome. It's just not a cheat code. So here's a couple questions for your lender. Which DPA programs do I qualify for? And do they add time or restrictions I should plan around? And lastly, option 4, seller concessions plus lender credits, the reduced cash to close lever. This is the secret sauce that can make a deal feel like no money up front. Seller concessions, the seller pays some of your closing costs, but that needs to be negotiated. Lender credits, the lender covers some closing costs in exchange for a higher rate. You might want to use these if you have limited cash, you're in a market where sellers are open to negotiating, or you're okay balancing rate versus upfront costs. If you're writing an offer, ask your agent these questions. Can we structure concessions without overpaying for the house to fund them? Now, let me give you super practical ways to think about all of this. If you're military VA eligible, start with VA. It's the cleanest zero down path and usually strong for long-term affordability. If you want more space and value and can live outside the core zone, check USDA. This is great for buyers who are flexible on location and if you have good income but no savings. DPA, this is great if you can handle program requirements or if you're short on cash to close but have approval. And lastly, work your offer strategy. Seller concessions, lender credits, and choose listings where negotiation is realistic. Days on market matters. In translation, don't try to do zero money down on the hottest house in the neighborhood that already has 17 offers. That is not a strategy. All right, so let's move on to 3 traps that blow up zero money down. Trap 1, appraisal gaps. If the house doesn't appraise at the price you offered, someone covers the gap. Sometimes that someone becomes you with cash. So what do? Ask before offering. How often are appraisal gaps happening in this neighborhood and in this price range? Trap number 2, no buffer. Even with zero down, there will be surprises, repairs, credits, or delays. So have a plan for inspection plus appraisal and a small emergency buffer. Even $1,500 to $3,000 makes a huge difference. Because zero down with zero buffer is basically buying a house on hard mode with no safeguards. Trap number 3, weak lender equals dead deal. Here's the one thing people don't say out loud. The market doesn't just choose the best buyer. It chooses the buyer with the most certain financing. That's why a good lender matters and why most good agents have a good lender they trust. And yes, I do too, because I'd rather win the deal cleanly than explain to you why the deal fell apart because someone was still waiting on underwriting. Here's a couple of things to ask your lender. How fast can you close? Will you call the listing agent to vouch for my file? And what's my real cash to close estimate on a house at X price? So in the end, zero down can be real, but zero money out of pocket depends on the loan type, your price point, and how the deal is negotiated. If you want help figuring this out in Middle Tennessee, comment your price range, which county you're looking in, and whether you think you're VA, USDA, or DPA. Or just reach out. My email is in the description. At Haven, we also work with many trusted sources all over the country. So I'm here to help you build a strategy and connect you with a lender who can actually run numbers with you. All right, don't forget to like and subscribe for calm, clear real estate advice. I'm Chad with Haven Real Estate, and this is From Production to Properties, signing off.